So very good evening to all of you and a warm welcome in today's discussion on transfer pricing with regard to the concept and complexities around tested party. This discussion is streaming live on the YouTube channel. And in case if you wish to revisit the discussion or want to watch it again, feel free to visit my YouTube channel and you will find this discussion on that YouTube channel. So in general, it is very important concept because uh, in transfer pricing, what we need to do is a benchmarking, and there are always two parties in the transaction, and one party needs to be tested. So we'll start with some basics, some warm up, and then we'll move on to discuss this concept more in detail. And once again, very warm welcome to all of you in this live discussion on transfer pricing, tested party in transfer pricing, and concept and complexities. So broadly, without going into much detail, how the entire system works in a transfer pricing. First of all, you understand the business of the taxpayer and the associated enterprises. Then you move on to understand the transaction. You identify and understand the transaction. And then one carries out functional asset and risk analysis. And then based on the data till this level, we understand, okay, whether there are any internal comparable transaction exist or not within the group or within the taxpayer. And in case there are no internal comparables or we want to strengthen the benchmarking process, we look for external comparables. And then you conclude, you compute, you do the margin analysis and you compute the LB or you do the pricing analysis and, complete your transfer pricing analysis. Yes, it needs a lot of documentation, but with regard to tested party, if somebody asks, where the tested party is involved, then when we are benchmarking, when we are identifying the comparables, maybe the internal or maybe the external, at that time we need to decide which entity in a transaction needs to be tested. And I personally feel instead of saying needs to be tested, one can say that which party can be tested. Because if you are aware about the transfer pricing, what we are doing, for example, let's say there is a resale price method. We compute arm's length range, the range, for example, let's say the distributor should earn 5 to 7% in a particular market or particular jurisdiction. Then when we are saying the distributor should earn 5 to 7%, this is the arm's length range. In one way, we are ensuring that yes, this should be the minimum or a maximum margin of a distributor for the functions which that entity is performing. And in my understanding, you can ensure a return or you can, sort of confirm a return when the entity is not taking significant risk, is not assuming significant risk, is not very dynamic. Because if the entity is, dynamic or assuming the returns or carry the intangibles, then, it would be tough to fix a return. For example, when one's invest in the bonds or, the fixed deposits or the government securities, at that time, one can certainly expect that, yes, I'm going to get this much of a interest or a return because those investments are less risky or maybe having the negligible risk depending upon the instrument to instrument. But if you are investing in the equity market, wherein the market is dynamic and it would be tough to ensure a return that, okay, if you have invested in the stock market or an equity market, you must earn 10% or a 15% rate of return. So from this basic example, we can understand that the that we can only ensure a return to the party which is least complex, or which is not assuming significant risk, or not having the significant intangible assets, and doing the least complex functions. So now, what OECD has to say on this, we have OECD TP guidelines, para 3.18. It says when applying a cost plus, resale, or transactional net margin method, as described in chapter 2, it is necessary to choose the party to the transaction for which a financial indicator, this is markup on cost, gross margin, or net profit indicator. Markup on cost is for cost plus method. Gross margin is for resale price method. And net profit indicator in case of transactional net margin method, that is TNMM. So generally, for these three methods, that is cost plus, resale, and transactional net margin method, we choose a tested party. So all these three methods, cost plus, resale, and TNMM, are one-sided method. So you need to justify profit of one entity. Let's say if I am exporting goods, I'm based out of India, I'm exporting goods to UAE for the distribution. Then if I need to choose one entity for which I need to justify the profit, and what is happening in the other entity is not the worry, is not something which you justify in the transfer pricing document or TP report. We justify only one party. So which that party needs to be tested under cost plus, resale, and transactional net margin method is called the tested party. You choose one party, and that party should be the least complex. It will most often be the one that has less complex functional analysis. Now, we have Institute of Chartered Accountants of India. They have also issued a guidance note on transfer pricing. And what they have mentioned, that the choice of the tested party should be consistent with the functional analysis of the transaction and characterization of the entities. The tested party generally would be less complex party to the control transaction, and should be the party in respect of which most reliable data for comparability is available. So again, the Institute of Chartered Accountants of India has got the same view, that the party should be the less complex party, and the data should be available for the purpose of benchmarking. They have also given an example, which I've quoted here, to illustrate, say, in a transaction pertaining to the sale of goods by a US company, an entrepreneur and owner of significant intellectual property, to its Indian subsidiary, a limited risk distributor. The Indian entity should be selected as a tested party, since its functions are less complex as compared to the US company, and data of comparable distributor will be more easily available for the purpose of benchmarking. So you always have a choice, and you need to choose which party you wish to justify. So if the party has got, let's say, more functions, maybe, the party is into the designing, is into the manufacturing, is into the marketing, is into the creating the brand awareness, doing a lot of strategic function for the growth of a business and growth of a market. So one can see that the entity is performing a lot of functions. If, for example, entity is, we are sitting in the month of May, but let's say, we are sitting in the month of March, which is the financial year ending for a country like India, or maybe we are sitting in the month of December, which is a financial year ending for most of the countries globally, and the company did a lot of marketing spend because of it's a festive season. So They organize various road shows and you know maybe participated in some exhibitions. But during that period, during the December, sales may not take place. It's only the showcasing of product, but the sales may take place in the month of January, February, March, or maybe later. But if we see the calendar period from Jan to December, we'll find that yes, because of those heavy expenditure on the marketing of product or participation in the exhibitions, there is a decline in the profitability of the company. So should we take such company as a tested party whose functions are dynamic, taking more risk? Or maybe it may happen that the company has got the designing team or in the R&D team, and those teams are working on designing of a new product. Company is incurring the cost, but somehow design is not getting finalized, and it took almost, let's say, 7 to 10 months, or maybe 12 to 15 months to finalize the design. So during that period, the cost which company is incurring would appear in the profit and loss account, and it will reduce the profit of the company, but there are no sales revenue. But later on, once the design got finalized, it is finally an intellectual property in the hands of the company. The company will start manufacturing, and in the later years, one will find that there is no design cost, but yes, there are sales. So because of this complexity, because of this dynamism, I feel, the entity which is doing a lot of functions, it would be tough to benchmark the profit of that entity. And that's why you look for more simple entity, which is, let's say, is only involved in purchase or resale of a product, which is doing less complex function. The returns are, more in sync with the functions. If I'm doing some activity today, I will get the return tomorrow. So the turnout of function and return is more quicker. So that party should be considered as a tested party. Now, moving further, we can take a couple of examples for all of you. And I would request to share your answer in our chat box. Let's say we have company A, which is into designing and manufacturing of stationery items, which it sells in India and other countries. For distribution in Middle East, it opens a subsidiary company in Dubai. Which entity should be considered as the tested party, and what should be the benchmarking strategy? So let's say the company A is in India, which is into designing and manufacturing of statutory items. This company sells the product in India and other parts, by exporting. In order to explore the Middle East market, they opened up a subsidiary company in UAE, in Dubai. And now we need to decide which party should be considered as the tested party and what should be the benchmarking strategy. So I would request, if you are listening to me carefully, and if you can share your view in the chat box, which party, according to you, should be considered the tested party? Any answers? KCF, we have one answer from IK. It's very correct. IK is saying, so do we have any other answer? Yes, the answer would be distributor. So in this case, distributor entity would be considered as the tested party. Now let's take an example two. Company A, based out of United States, is into manufacturing and selling of electronic item, which it sells in US and other countries. For manufacturing of certain parts, it opens a subsidiary company in India, Indico. This Indian company receives design and other product specification from its parent company. Based on such details, Indico manufactures and exports goods to its parent company. Which entity should be considered as the tested party, and what should be a benchmarking strategy. Please share your view that which party in example 2 should be considered as the tested party in the chat box. Yes, so we have two answers, one from Sushma and another from Manish. The answer is correct. In this case, being Indian company, this is Indico is the least complex. So we should consider Indian company as a tested party. So I'm sure we are all of you are clear on the concept. Now let's look for challenges, The challenges generally, when you are benchmarking and if so when it comes to a challenge, if let's say there are two entities and one entity is based out of your jurisdiction, the other entity is based out of foreign jurisdiction, I think the first challenge can you take foreign company as a tested party, or you need to take your local entity as the tested party? So in my view, and as far as India is concerned, we have uh, the honorable high courts of various states have clearly said, it depends upon which entity is the least complex. And one can certainly take foreign entity as a tested party. And OECD also says that you can take foreign entity as a tested party. But yes, for that, you must have proper uh, documents to support your functional asset and risk analysis, which is there in the TP report, that foreign entity is the least complex, or for that matter, your local entity is the least complex. So generally, in the transfer pricing audits before the tax authorities, what we have seen that we wish to take a tested party which gives us the beneficial result, uh, which may or may not be accepted by the tax authorities, primarily because the documents to support the functional analysis are not there with the party, or they do not want to share with the tax authorities. So first point, whatever entity of freezing, in our view, there should be proper documentation support with regard to the functional asset and risk analysis. Second, the financial data of the tested party. So generally, when you are taking the local entity as a tested party, the financial data is available. But when you are taking foreign entity as a tested party, sometimes, the group do not share the financial data. If the financial data of tested party is not sure, there is, extremely tough. And I think I have not seen any case wherein without a financial data, you can take the foreign entity as a tested party. Now, broadly, there can be two cases. One, the foreign entity is, let's say, the captive service provider or a captive manufacturing unit, and the entire profit and loss account, the audited accounts are available, uh, and those audited accounts are presented. In that case, it should not be an issue. But yes, sometimes there are apprehensions that the accounting period is different. The accounting period in the wherein the tax assessment is going on is different, and the accounting period of foreign associated enterprises is different. But yes, courts have ruled in favor of the taxpayer that, let's say, if in India the accounting period is April to March, whereas in the foreign country the accounting period is Jan to December, one can certainly take Jan to December financials for benchmarking. So, for example, for the period of April to March 24, one can consider Jan to December 23, the financial data. The second set of issue with the financial data, wherein the tested party is not the captive unit and is only, part of the services are given to the related parties or associated enterprises by the tested party, then you need a segmental data, because let's say, the markup charged by the foreign entity is cost plus 6% or 5%, then you are not only benchmarking, the markup, which is 5 or 6%, but you're also benchmarking the cost. So there should be proper documentation in support of that cost should also be available, wherein it is, you are applying the resale price margin, then the gross margin analysis, including the sales and cost, should be properly available with the with the taxpayer. So for that, one may go with the certification from an independent CPA in support of that segmental financial data which is needed. And then certainly the benchmarking of markup with the local comparables or the countries which are comparable to the foreign tested party should be considered. Wherein, the data availability is good. For example, if we are taking India as a tested party and we have good financial data for Indian companies are available. In that case, one should only take the companies operating in India. One should not try to expand the search of comparables to the Asia Pacific region. But yes, wherein there is a data scarcity is there, certainly one can go beyond that local territory for the purpose of comparable data. So that is actually the next point. Okay. So we have already discussed the financial data. Now we are on a comparable data. So now we have seen, that there should be proper documents in support of FAR. There should be proper documents in support of financial data. And yes, there should be proper documents in support of comparables. So comparable exercise is actually, I personally feel is very important because the entire conclusion, is dependent upon the comparables, and you arrive comparables after understanding a FAR. So when we understand a FAR, the classification of the tested party, and then developing an attributes or search criterias for the comparable are very important. And then you look for comparables in the databases. So for example, if you have taken a tested party which is based out of Singapore, preferably one should have companies operating in Singapore. And if there is a data scarcity, maybe companies beyond Singapore, maybe in Asia Pacific. But yes, the first try should also always be to get a local comparables, local in the sense local from the perspective of the tested party. Then the financial information should be properly downloaded. There should be, if you are rejecting a particular company or if you're accepting a particular company, there should be proper reasons, in the TP report in support of acceptance or rejection of company should be there. So these are some of the challenges, which we feel are significant from a tested party perspective. And yes, based on our experience, we have seen sometimes, when taxpayers, maybe in the initial years, they choose tested party, which according to them can be justified, not because of the least complex, but because that the margins of this company is good. Let's take this party as a tested party and benchmark. And if that party is a complex entity, if not today, tomorrow there could be the variability in profit. And if there is a variance in profit and the profit goes down, so after 4 or 5 years, if you face that crunch, what will happen? In last 4 or 5 years study, you have considered a complex entity as a tested party, then you may end up into trouble maybe in the next years. So to clients and to consultant, it becomes very important to choose tested party very cautiously. So this was with me for you in today's discussion, and now I open the house for open house, for the query you have. If you have any query, please feel free to raise your hand. with regard to tested party, and I would be happy to share my view on the same. Okay, it seems there are no queries. I trust we are clear on the very important, short, but yes, very important concept in transfer pricing, that is tested party. This session is available on the YouTube. You can watch the recording in case you have joined in between. You can watch the recording. Jatin, please free to unmute yourself and ask the question.
Yeah, hi Gaurav. Hope you are doing well.
Yeah.
So just wanted to check one thing. Suppose we have choose one party as a tested party. So later on, can TPO deny uh, to accept that party as tested party?
Yes, TPO, the tax officer can always challenge your selection, but they must come out with the reason that why they're denying your party as a tested party. Or for that matter, they can always say, the comparable which you have chosen are not correct. So they have the full rights to challenge your selection, both of a tested party and comparables, but they must come with the reason why they feel, their selection is different from your selection.
Okay, okay. Thank you, Gaurav.
Thank you. Any other question? If you have any other question, please feel free to raise your hand. Okay, I think we are done with the sessions and the question. Thank you, all of you, for joining. Feel free to share your feedback. Uh, we'll keep you posted of for the next webinars or discussion that we're going to have. Thank you.